Black Knight announced September 7 in its Mortgage Monitor report that annual home prices declined in July, with the median home price falling 0.77% from June. Now that doesn't sound like a big drop, but it does if you know that that was the largest single-month decline since January 2011. This means that the home price acceleration slowdown, for the first time, appears to have morphed into an actual decline, at least at the national level. Now let me be clear, this news by itself does not mean that the value of your home has gone down. Real estate is local, and the results in one neighborhood, one county, or one state may not be the same in another place in the country. However, this news from Black Knight does mean that this may be the beginning of a downward trend in home prices. Not just price reductions when homes are listed on the market, but an actual decline in home values. Hi, this is Robert C. Baker, and on this channel we talk about all things real estate in the greater Chattanooga, Tennessee area. And in this video, we're going to talk about how potential home price declines may affect you in relation to selling or buying a home. And stay tuned, because if you have a home equity line of credit or HELOC, you'll want to know what to do now if home prices do indeed go down. Black Knight's announcement September 7 was not unanticipated. Since the beginning of the year, economists have been predicting an eventual downturn in the real estate market because, after all, what goes up must come down. At the end of August, Goldman Sachs released a report predicting a downturn in the real estate market, with home prices rising an anemic 1.8% in 2023. That stands in stark contrast to the double-digit increases in home prices we've seen the past 2.5 years. Say, if you're enjoying this content, go ahead and hit that like button and subscribe to the channel so that you don't miss future updates. Thank you. According to Fortune, other folks predict a similar single-digit rise in home prices next year, but still others feel home prices could fall anywhere between a half percentage point to 10% or more. Over the coming year, the Mortgage Bankers Association, Fannie Mae, Freddie Mac, CoreLogic, and Zillow also predict a single-digit rise in home prices. Others think falling home prices are on the horizon. Indeed, modest home price declines are currently forecasted by Moody's Analytics, John Burns Real Estate Consulting, Capital Economics, Zelman & Associates, and Zonda. Both Fitch Ratings and economist Robert Shiller, who predicted the 2008 housing crash, think a greater than 10% decline in U.S. housing prices could be in the cards. Speaking of Moody's, just a few weeks ago, Fortune reported that Moody's believes home prices could fall 5 to 10% if we enter into a recession. And that could be as high as 20% in some overinflated markets. Of course, double-digit price declines have only happened twice, in the Great Depression and the Great Recession, but the thought of the potential of such steep declines is indeed breathtaking. But let's bring it home. How would falling home prices affect you? Here we're going to talk about declining home values and how that might affect you as a home seller, a home buyer, or as someone who has a home equity line of credit or HELOC. First, if you are selling your home and your local area is experiencing actual home price declines, you will be affected. I've mentioned in several videos the past few months or so that home sellers are going to have to take into account that the market has shifted. With this latest news, sellers are going to have to pay attention even more closely to recent actual sold comps when pricing their home. As I've said, the days of speculative or exuberant listing prices for most areas of the country are over. Let me also say, and this may be stating the obvious, that an actual decline in home values is different than home sellers making price reductions in order to attract buyers while their house is on the market. Black Knight's report deals with a decline in median home prices, that is, homes that have recently sold. A trendy decline in median home prices indicates a decline in home values over time. How are we doing in the greater Chattanooga, Tennessee area? Glad you asked. Median home prices have been rising over time for the past decade in the greater Chattanooga, Tennessee area. And median home prices have been rising without fail on a month-to-month basis since September 2021. By that I mean that prices have been going up every single month. That is, until July. What's emerging is that the greater Chattanooga, Tennessee area may have hit the peak median sales price in June, coming in at $328,225. But in July, the median sales price fell 5.6% to $310,000. And although the August figures have not yet been released, my look into the back end of the local multiple listing service reveals that the median sales price will come down another 3.2% to $300,000 for the month of August. Which means that, if confirmed by the final numbers, that the median sales price has fallen 8.6% over the past 2 months. At $300,000, that is now the same value as it was in March of this year. That's right, at least according to median sales price, we're back to where we were in March. Keep in mind, however, that median sales prices in a typical market bounce back and forth and generally decline somewhat during the fall and winter months. But if the downward trend in median sales price continues, we may be seeing a decline in home values in the greater Chattanooga, Tennessee area. In a situation where home values are falling, home sellers need to be really attuned to what the market is saying while their house is on the market. This is going to include paying close attention to two things. First, how quickly comparable homes are selling in your neighborhood, and second, the amount that those comparable homes are selling for. If I were selling a house today, I'd be watching those two figures like a hawk. That is, on a daily basis. Second, an actual decline in home values will affect home buyers. Now let me say this, during good economic times, folks buy, sell, and invest in real estate. During bad economic times, folks buy, sell, and invest in real estate. Whether prices or values are rising or falling, people are going to buy, sell, and invest in real estate. Now, if home values start to fall, that's going to affect home buyers in different ways depending on their personal situations. Must they buy a home, or do they merely want to buy a home? Note the distinction there. Must you buy in the current market, or are you only thinking about it and can put it off a bit? Let's assume that home values are falling, but you've just been transferred to the greater Chattanooga, Tennessee area. You've tried renting before, and that's not for you and your family. You enjoy the comfort, security, and privacy of a single-family residence. You want to buy a home in the greater Chattanooga, Tennessee area and will buy one regardless of the current real estate market. Here's another scenario. Maybe you're enjoying your golden years, but your current home's footprint severely impacts your mobility, so you've got to find another place to live. You've given yourself 3 to 4 months to find another home, and you want to purchase your new downsized home before you sell your current one. These two situations happen all the time regardless of the current real estate market situation. Sometimes folks just have to buy another home. But let's look at it another way. Let's say you don't need to move. You're not being transferred. You already have a single-story residence and don't need to downsize. But you would like to move eventually when the timing and conditions are right. See where I'm going? Now, if you see home values going down, which may now be happening, and you also see that mortgage interest rates are going up, which definitely is happening, what might you do? If you must buy, you're going to buy. That's simple. But if you don't have to buy, at least right now, you might wait. That's right. If home prices are going down, and if mortgage interest rates are going up, and you're not forced to buy, you may hold off a bit. In fact, that's what some of my clients are considering. Declining home prices may mean that, for folks who can wait, putting off a purchase until the market settles down a bit might be a good thing. Listen, the U.S. Federal Reserve is absolutely intent on reducing inflation, and they're going to keep raising the U.S. Fed funds rate. We'll probably see another 75 basis point increase this month. And while the Fed funds rate does not directly impact mortgage interest rates, they do affect the overall economy, and mortgage interest rates will continue to rise. That's going to continue to dampen buyer demand and push home prices down even further. Again, home values may be going down, but mortgage interest rates are definitely going up. Third, a decline in home prices will affect folks with a home equity line of credit, or HELOC. A home equity line of credit allows you to borrow against the value of your home's equity, or the difference between your home's appraised value and the amount that you owe on it. Essentially, a borrower can use a HELOC for any expense they choose up to the amount approved by the lender. A lot of folks use HELOCs to remodel or make updates to their current homes, purchase additional properties, assist with college tuition, or help out with expensive medical bills. Typically, HELOCs are capped at 85% of the home's appraised value minus whatever is owed. You can borrow up to the limit, typically for 10 years, paying interest only or making payments according to your loan agreement. After the 10-year draw period is over, you can't make any more draws, but must begin making monthly principal and interest payments until the loan is paid off. This is during the repayment period. Some HELOCs require you to repay everything at the end of the 10-year draw period, so if you have a HELOC, you need to know when your draw period ends. Because HELOCs are tied to your home's appraised value, it's also important to know your HELOC's terms. A significant decline in your home's appraised value means that your home's equity may be impacted as well. Your lender could reduce your ability to borrow, or what's called a HELOC reduction, and if you're in a negative equity situation, the lender could freeze the HELOC, meaning that you would not be able to borrow additional funds. That's why if you keep balances on your HELOC, it's also important to keep an eye on your home's value, if only to ensure that you don't find yourself in a negative equity situation. It goes without saying that any borrower should make all debt payments on time, maintain a good credit score, and to maintain employment, or otherwise have a reliable source of funds to make debt payments. Additionally, HELOC interest rates, like credit cards and automobile loans, are tied to the Fed funds rate. Since the Fed funds rate is rising, the amount of interest charged on HELOCs is going up as well. Even more incentive to pay down or pay off credit balances. If you have a HELOC and have questions about it, be sure to contact your lender. Thinking about buying or selling a home in the greater Chattanooga, Tennessee area? Watch these videos next.